All right, hello again and welcome to another Red Cloud webinar. My name is Kobe Kushner. I'm a mining analyst here at Red Cloud, and today we're going to be talking about lithium with Noram Lithium Corp. Joining us is Noram's president and COO, Peter Ball. Peter started his career as a mining engineer, but has since worked in all levels of leadership in the industry, raising over $250 million in the process. He's a great guy to chat to and an excellent storyteller, so I'm excited to have him here. But just a bit of background on lithium. I think most people on this call are aware of what lithium is used for and the EV revolution that's driving its rally. We all know prices have been on a tear. Technical and battery grade lithium carbonate is up 58% and 54% respectively just year to date. Interestingly, lithium carbonate prices are still trading at a premium to lithium hydroxide, and carbonate is what Noram is aiming to produce at its 100% owned Zeus Project in Clayton Valley, Nevada. And we might recognize Nevada for its precious metal potential, but it's also an emerging battery hub. It's home to Tesla's famous Gigafactory. It's also home to Albemarle's Silver Peak operation, which is currently the only source of domestic lithium production in the US. And as Peter will show you, Noram's Zeus Project is right next door to Silver Peak. So during today's webinar, Peter is going to provide us with an overview and an outlook. And when he's done the presentation, we will move on to the Q&A section. A reminder that you can type your questions into the comment box at any time. But as always, we have to run through the fine print. So during this webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of the company's corporate deck, which we will see momentarily. And for Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Noram Lithium. And with that, I'll now turn it over to you, Peter.
Thanks, Kobe, and thanks everyone for coming in the middle of the afternoon, or if you're on the West Coast, where I am from in Vancouver. I appreciate everyone's time today. As you can see in my backdrop, I'm actually in Nevada. I'm actually doing a site tour with a strategic investor, which I'll talk about in a couple of minutes in the presentation. This should take about 20 minutes to run through this. As Kobe said, I'm going to tell a little story about Noram. And thanks again, Kobe, for highlighting where lithium came from, where it's going to go over the next few years, and the supply crunch that we're all aware of, and the race around the world to find projects like the high-grade Zeus project, which we'll talk about today. And, I think the market's going to need about 50 to 100 of the projects like we have. They're all going to get to production at some point. And I'm going to run through the Noram story. It's interesting. This project, was, put together about 5 or 6 years ago from the original founders and 2 of the individuals who are now the CEO, Sandy McDougall, and Anita Angie, who's the chair and also the chief financial officer of the company. And not often do you see executives or management stick so long in one story, but they're such big believers. They're large shareholders of the company. I'm new. I just started a couple, 3 months ago, and we'll talk about why I came in and joined the team and where I think this company will go through this 2022. So I'm going to run through this presentation, and as you can see on the front slide, it highlights some information about the PEA that was just completed in December 2021. It has some good numbers there, but I'll dive in a little bit better in the next couple of slides. I'll talk about the history of what happened last year, which was one of the most incredible years for Noram's history, and what we believe 2022 will probably be one of the next biggest years for the company, and upcoming catalysts, and also the strategic investor that we are about to close a large financing with. We're mining, so we're mining people here. So forward-looking statements are usually front and center and throughout the entire presentation. So please guard that and read it at your leisure. I won't go through every single bullet as shown here on this slide, but really, we're in Nevada. We're chasing lithium. We have probably one of the most robust assets in Nevada, if not the US, with the metrics that we'll highlight in the PEA. We have enough resources to last for 200 years. We put together a PEA last year using a 40-year mine life and only using a $9,500 per ton LCE price. You know, long term, I think people are forecasting 14,000, and today it's trading at 60,000. So it looks to be good for the next couple of decades in the lithium space. Again, I'm going to talk about the PEA in a couple of minutes on the next couple of slides, and really what was used in there and how we compare to our peers, and where we see this project going with the upcoming financing, and as we push forward to aggressively, for the first time, advance this asset on every level. We'll talk about the team in a minute. We'll talk about the insiders, and you know, they have a large share position in the company and have stuck through this project since it was staked in the initial shell, and I think it was 2016, way before I even joined. Great share structure, we'll talk about that. And again, we'll also talk about the share structure and how we compare against our peers. And I'm going to do a lot of comparisons to a really great company and a great project immediately next door, Cypress Development, to kind of show our project versus theirs, kind of an apple to an apple, and kind of highlight our PEA versus their PFS. Right now, you know, before this financing, we're actually funded to go through the PFS stage this year. But we believe it is time to cash up. It is time to have a strategic shareholder join as we push forward, as we head to the DFS, or definitive, in the next couple, 3-4 years. We're in Nevada. We won't talk about that. Are we undervalued? Hopefully by the end of this presentation, you'll maybe think we are. I severely think we are, and we'll see what happens. So, and again, I'll talk about the development plans and what we're planning to do this year, and catalysts and recent milestones. So as Kobe indicated, we're in Clayton Valley. We're right next to the only lithium producer in the United States of America, Albemarle, with their Silver Peak project. We've got a great land position. Basically, I can throw a rock from our project, which I'll be on our site tomorrow as I drive up with our new investors who are completing their due diligence. Great land position. And if you picture a deposit, you know, I try to go high level, 3 kilometers long, kilometer wide, 60, 70, 80 meters thick. It's this lithium clay, illite, smectite. I'm not a geologist, but those are some of the funny words that are used to define the clay, the lithium, which is previously, of course, in the brine next door at Albemarle's project, but is leached through the ground and into the clay surrounding Albemarle, and that is the stuff that we're advancing at the Zeus Project, or our neighbor Cypress is doing the same thing. And if you look at Cypress's deposit, which I'll talk about in a second, and ours, picture that same deposit kind of cut in half with basically the exact same metrics, but there's just a property boundary that separates us. It's really the same metallurgy, mineralogy, geology. It's the same dirt, the same clay. We've done about 70 holes or 5 resource updates over the last few years. You know, most of them are open at depth. We've never really hit bedrock. We don't really know what's down beneath us. So big potential. But again, we have enough resources for the next 200 years, but we have a 40-year mine life done in the PEA. We've done 3 sets of metallurgy, giving an indication that we'll have some good recoveries into the 80s, maybe 90, but let's stick with the 80s. And a good thing about the metallurgy is you have a number of groups in Nevada that's done a lot of studies and spend millions of dollars, which is to our advantage because we get to kind of watch what they're doing and kind of advance our project by not copying what they're doing, but just, you know, learning and taking advantage of the outcomes from their studies, which is really good. Such as Cypress next door, they got a pilot plant and they're doing some great work, and that's advantageous to our shareholders because we're saving money by watching them. Again, the last year was one of the biggest years. There was a resource update, which significantly increased the resource. I'll show a slide in a second. The PEA was done in December. Just a really big year. I just joined December 1st last year, about 10 days before the PEA started. And, you know, my goal when joining the company, you know, I've been in the business for a few years, is to find a strategic investor that understands the market, understands our project, recognizes the potential long-term about the profitability and the revenue, the net present value of our project, and make an investment with us. But also, when you're doing these things, the mechanics of putting together a strategic financing is we got to watch out for our shareholders. We have 75 million shares out after 5 or 6 years, again, way before my time. And if the management that is still with the company today, they've kept the structure tight for a reason. That caused an opportunity for sort of like an elasticity or an upward or re-rate as we de-risk the project this year. So again, touching on the binding LOI really quickly is, again, the mechanics is how can we minimize the dilution by doing a financing at a higher price than what we were trading, but also not having some companies are doing warrants with a 30% premium on it. They're a big weight, I would say. So we did sold for 1% royalty, as seen on the page here. And what it allowed us to do is really next door, Cypress has got a 3% royalty, but really they can buy 2% down for a couple $1 million and they're down to 1%. So we've kind of put ourselves apple to apple here. We've got 1% royalty, which allowed us to structure the deal by having the share price done at a premium. We were trading in the 70s and discussing with Waratah and LRC is that I wanted a premium for the shareholders, and I didn't want a cumbersome small premium on a warrant. So we did it 82.5 cents as shown here. And what we did is they wanted 19.9. So I said, if you're going to have 19.9, let's do it at a high premium. If you're going to have the right to buy back in. So it's about an 82% premium, and they have 30 days to act on this investment. I don't want the overhang sitting for a couple of years, and I don't want a full warrant. So it's a great opportunity for a phenomenal group, which Waratah is, a very well-known multi-billion-dollar institutional advisors that advises pension funds and such to find strategic and good investments. And they've made investments not only in our space, in companies, but Neo Lithium, Standard Lithium, Galaxy, Brig, Brada. So let's start off with management and directors at the top of the page. Anita and Sandy have been working together for a number of years and are both, I think together they control about 4 million shares of the company. They've been with the company for a number of years, and Anita comes with a really great background involved with and sometimes the creation of the companies that are shown here, from Unity to First Cobalt, and then kind of stepping away and letting the companies evolve. And Sandy, very successful broker from Canaccord, and I've never seen more passion in an individual about this company, this asset, and wanting to truly find the best valuation for the shareholders, as he's a large shareholder himself. Myself, I'm new. No one likes talking about themselves, but I worked in engineering for a number of years and worked for a few of the larger companies like Hudson Bay and Echo Bay Mines and Sher Gordon, and got into the corporate side of the game and raising capital. And I used to be a broker at RBC, so I've got a diverse background, understand the capital markets, and can usually last with the smart engineers like Kobe on the line here today. But then I slowly fade away because it's been a number of years. Brad Peak, he actually staked the project, drilled every single hole in the project, and it's great to have Brad stick along for same as Sandy and Anita for 5 or 6 years, believing in the asset, believing in the market. And I'll actually be at site with Brad and the investors tomorrow here in Nevada, about 2 hours up from Las Vegas, as you can see in my background. Art and Cyrus, just to touch on those, Art and Cyrus actually also own about 2.5 million shares combined. They've been with this company at the same length, 5 or 6 years, big believers. And Adam is a new independent director who was appointed in September last year. And really, as the president of the Rare Earth Association of the U.S., he really brings strong connections across the U.S. And that'll really help us as we push forward through the permitting and the BLM discussions in advancing the asset. Anyways, let's dive in to a little bit about the capital structure. We trade, I think today, 88 to 90 cents. Market cap, whatever, 65 million or whatever it is today. Cash is really about 2.3, but with the financing, we're going to end up having in a couple of weeks, probably about 20 million, which will allow us to be fully funded right through, we believe, potentially all the way to the DFS stage as the second allotment that Waratah may pick up at $1.50 will help us push forward even further. So it might be the last capital raise for a number of years. Shares issued 74.4, but through the financing we'll have about 88. We believe the warrants, which are priced at about 94 cents, will come into play. That'll be about 91 million shares. So structure to structure, how do we match up to our neighbor? I think Cypress has about 145 million shares outstanding. We'll have about 95 fully diluted, except for the options. I believe they're into the 180, 190 million. So it's good to have a tight share structure as we push forward, because it helps for a potential significant re-rate as we go through the process, de-risking the asset with the significant treasury we're going to have. We usually have good liquidity. I think we had 600,000 shares last week. I think I bought personally 100,000 shares last Monday. I bought 50,000 shares the next day. I bought some more shares the following day, trying to keep up my own position, because I've been kind of in blackout finalizing the strategic investment. I'm not going to talk about everything on this slide, but really it shows on the top left 2016 when it was staked. And the original shell, which is actually still controls, I think 1.7 or 1.6 million shares, is Canadian Maverick, symbol CDN. As you can see on the bottom left-hand side, that was a shell. It was taken out, placed in the Noram Ventures, which was renamed Noram Lithium last year. And the rest is kind of history as you follow along on here, and we'll go through line by line. But really at the bottom, it shows Adam joining, the resource update last September, myself joining the PEA, and really a binding LOI that we're in the midst of closing by February 25th. I think all the items have to be ticked off the box by this Friday. Nevada, I'm not going to go into too much detail. It's a wonderful place. I used to work at another company in Nevada for a few years. Understand the mechanisms to working in this state and working with the BLM and advancing plan of ops and going through the permitting and or negotiations with the government as you push forward a project. With Albemarle, as you can see, immediately to our western flank of our project. And really, if anybody doesn't know, right, if I'll try and draw it here, and I'll hopefully erase it right here, it's right below our project, kind of adjoining ours, actually maybe like this. This is Cypress. Cypress, again, as I indicated, has the exact same deposit on every level in ours. As on the far right here, on the right-hand picture, you can see where a lot of the drilling was focused, beefing up our measured resource as you go out from there, going into our indicated, and then into the red drill holes is really where we have a bunch of inferred. But again, we have enough resources for a couple hundred years. I'm not going to say too much about this slide other than last year when they did the resource update prior to me joining, they increased the M&I, or the measured and indicated, by 60 and the inferred up 370%. What we're going to do this year in Q1, and we'll be talking about our drill program fairly shortly and with some news coming up probably over the next couple of weeks, is do 12 holes and really just do some infill holes. As you can see on this sheet here, do some infill holes in this area to take some of the inferred and reclassify them, as you would call it, into the indicated. So this is side by side. So the left-hand picture is the grades. So as you can tell, pretty much every bit of dirt, as I call it, on the project pays, or our cutoff is 400 ppm, and the green on the bottom left side is 400 ppm. So if you accidentally scoop the wrong piece of dirt into your process facility, it'll probably still pay. And as you can see, our what I consider a high grade core up to 3000 ppm lithium. And again, if you took this zone here and extended it, so this is ours, and if you went off onto the adjoining property, which is Cypress, that's exactly where their pit will be. So it's kind of really the same deposit as I was mentioning it. On the right-hand side is the classification: measured, red, indicated, brown, and blue is the inferred. So we're going to drill here this year, and we're going to drill here. And when I say this year, I mean Q1. Really, it's just taking the blue stuff, upgrading it to the indicated, because when you do a PFS, you actually have to have measured and indicated. You can't use the inferred tons. I'm not going to go through every number here, but on the left-hand side, the $9,500 per ton. Why do we use 9,500? We use 9,500 because Cypress did. And if we're going to compare ourselves to another project, let's use the same numbers on every level and really just highlight how our project has incredible metrics and incredible or significant, robust economics. Again, we have a great operating cost, and I'll show on a slide here in a couple of moments how we compare to other projects globally that will be operating we call it a 2025 cost curve. Good internal rate of return. Most of the banks want you to be over 20. And if you look actually at the bottom here, and you look at the long-term forecast, which is, the analysts think 14,000, the net present value of this project at 8% is about 2.7 billion, and with an internal rate of return of about 52%. So this project will be one of the most robust economics out there comparatively to our next door neighbor, Cyprus. And here, this is just apple to apple. We're on the left, Cyprus on the right. They've got a PFS, we have a PEA. We believe internally that our PEA, when we complete our PFS later this year, will probably have similar numbers to what we have today. And really, our payback period is 3 quarters. It might be 3, it might be 3.5, but really it's great payback period. We do have a high grade core that will assist in increasing the internal rate of return, faster payback period, but really all these numbers will probably end up being the same at the end of the day. Next slide. So again, this is as I was drawing that funny little map here, this is of course our pit here. And if you just go off here, this actually comes here. So really you have the potential for a super pit if these projects were one day put together as one. The metrics would be probably significant also, but currently we are focused on re-rating the stock for our shareholders and advancing in what I call de-risking the asset to get that or climb up the valuation curve, as you would put it. And this slide, you can make these slides up any way you want, really, but I just took a number of other companies in lithium carbonate, lithium hydroxide, and kind of put what is our price, our operating cost, which is 3,300, and in utilizing $9,500 per ton. Now you can see other companies are using 11, 13, 5, 12, etc. as we slide across here. So if we would have used 11, our NPV would be in the higher, closer to 2 billion, and our internal rate of return would be closer to 40%. So we're great that we're being conservative, but again, we can always run the numbers at a higher price and get a higher NPV. But let's start off where we are right now and be conservative for our shareholders. Cost curve. This little box on the right-hand side should actually be on the left side. It just really shows that all the companies that should be producing lithium in 2025 are higher than ours. Their costs are higher than ours. So that's good. We have some room as we push forward through the PFS and the DFS. If our costs happen to climb a little bit, which they always tend to do, we're still probably aligned very well with all the peers or all the people that are trying to produce lithium over the next few years. Measured and indicated. So we're in the middle of the little funny chart here. And really, if we wanted to, we could take from the center here, we could take some of this 3.89 million tons of inferred, we could spend a few $1 million and we could upgrade it and change it from inferred to indicated. But what's the point? We already have enough resources for 40-year mine life for a couple 100 years. So, I mean, really, if we added them up, we probably would be right over between these two companies here. So we could show a higher resource, but there's no point in wasting money drilling when you don't really need any more resources at the current moment. And again, it's always nice to be on the left side of the chart. On this slide, we feel with a significant investment coming from the strategic investor for the first time in our corporate history, we'll have the treasury to fully advance the project at a more of an aggressive pace on every level, through the studies, through metallurgical studies, engineering studies, working with the government, doing all the work that you would need to get that re-rate. And I guess I'm done. And the only thing I'm going to talk about on the very right-hand side is at the bottom is next steps. So this year, as I mentioned earlier, we're going to be doing 12 holes, and that's really just to upgrade some of the inferred into the indicated stage, because in the PFS you need measured and indicated. We're going to be looking at completing additional metallurgical studies, even though a lot of the work has been done for us by our neighbors throughout and around in Nevada, and who are also looking at lithium projects globally. It's a significant advantage for Noram to save millions of dollars, but we will look at doing a pilot plant. We think we have our ideas that will maybe add some additional value to other companies on how they do theirs. We'll be pushing forward to do a pre-PFS by the end of this year. We're going to say Q4. If we beat that, fantastic, but let's aim for Q4. Let's be conservative, and look to do some baseline studies and what I call pre-permitting. There's a bunch of check marks that you need when pushing a project forward, and if we start some of them now, we'll be at a significant advantage as we push forward into 2023 and beyond. So that is pretty much the presentation. Normally I would have ran through that. In the United States, the government has identified lithium as a critical mineral. In other words, it has to go into production in the US or have an end user opportunity or right in the US, etc. There's lots of policies. Way over my head, I would normally talk about the crunch, but we don't need to do any of that. And I'll end with really, this will be our biggest year. Last year was a significant year for the company. I always try to be as transparent and open and available to anybody. If you have questions that I don't have the answer, I'll get back to you within a day. There's my email, there's my cell phone. Give me a call anytime. As you can tell from this presentation, I do like to talk. But I'm a mining kid for my entire life, so I have a passion for this industry and I have a love for this project. It's going to be a significant year. So I'll hand it over to Kobe, and I appreciate everyone's time, and I think I'm about on schedule, 11:26. Back to you, Kobe.
Awesome. So thanks, Peter. That was a very informative presentation, and we will now start with the Q&A portion of this webinar. Just a reminder to everyone on the line that you can type your questions into the chat box at any time. Okay, so I guess I'll kick it off, Peter, but you said you're starting a 12-hole program soon. That's correct, right?
Correct.
And in your last resource, and you grew your M&I by 60%, your inferred by 340. And just remind us, with that program, how many holes did you need to drill to get that substantial increase?
I think it was about another 10 holes before my time, but I'll get back to that one. That I don't have the exact answer. But this program will take 175 million tons from that 837 million tons of the inferred and reclassify that into the indicated category. So 12 holes will do about 200 million.
Great. All right, so let's discuss this royalty financing and the investment from LRC and Warta. You know, I know you're in Vegas now. You're going to site tomorrow with them. But, you know, how did this come about? Did they approach you? Were you looking for strategic investors and you went to them? Who came to who?
I've known, there's two co-chairs. Mark Wellings, which I've known for a number of years, and I actually did a couple of deals with Mark over the last decade. Different commodity. But I reached out to Mark, indicating that I just got involved. And it was actually through a Google search that I learned about Lithium Royalty Company. I knew of them, but then I did some due diligence on their investments. I saw Mark Wellings as the chair, gave him a call. And pretty much after that, the conversation started, the back and forth, the presentations, the due diligence process. And hence we're at the point we're about to close it. So it's all relationships using this industry, but the asset speaks up for itself completely.
Yeah, for sure. So, you know, next door, you've got Cypress and they're running their pilot plant right now. You know, do you have any insights as to how that's going? Do you keep in touch with their team?
No. So we follow along what they're doing. I understand that they just actually ran their pilot plant for 14 days straight. And I think they reached up the recoveries of about 85%. I know they're still trying to refine that and reach higher recoveries. But yeah, personally, I'm not in touch with them yet. We have people in our organization that would continue those discussions. But yeah, we follow what they're doing and how their progress will assist us very closely. Saves us money the more we learn from what they're doing.
Yeah, for sure. And what about Albemarle? Are they kicking tires at you or your neighbors' properties at all? I guess what's happening in the entire district?
Well, I mean, you picture these guys have been on Albemarle, a multi-billion-dollar company, trades a couple $100 on NASDAQ, been sitting there for 60 years operating. They did kind of reduce their plant operating capacity a few years ago when lithium really wasn't in favor, but they announced last year that they're actually doubling their capacity to 5,000 tons per year, which is really not much compared to what's happening in and around them with the clay deposits. And, I grew up in all these small mining camps, and never have I ever seen 7 projects or 8 projects all advance into 8 mines around what I call, there's big dads right in the middle of us with lots of capital watching what we're doing. Currently, we're not in discussions with them. But when you have a neighbor who has extensive water rights, extensive power, experience in the industry, capital, I don't think it'll be too long before they recognize that these assets are significant and will significantly affect their portfolio if they reach out to have a discussion.
Yeah, and with that, I guess, I know this is your presentation to sell your own story here, but just adding to that, in their press release last year, they did state that they'd be looking for a clay potential as well.
Yeah, exactly.
So I guess what's the end goal here? Are you guys positioning yourself as a takeout, or are you hoping to, down the line, take this thing to production?
Yeah, it's a good question. You always kind of look at what you're good at. Could we hire and build out our team to take the asset all the way to production ourselves? Probably, absolutely. But that's not our strength. Our strength is being able to do what we can with the asset to increase the valuation, de-risk the asset for our shareholders to get the premium they deserve. And if a premium is reached where our board of directors and our team and our shareholders agree that it's time to hand off the reins, I think our company would look at that. But we have, for the first time, we're going to have the capital in the corporate history to do what we're trying to do, and that's have the capital on hand. It's de-risk year, it's re-rate year, and it's time to get aggressive to get that premium. It's for the shareholders. It's not for me. I'll become a large shareholder, of course, but yeah.
Good answer. And, you went into this a lot in your presentation, Noram and Cypress. You guys are essentially looking at 2 parts of the same deposit here, and the economics between both of you, they're very similar. If not, Noram's numbers actually look a little better. And as I wrote about in my note that I put out a couple weeks back, I think the biggest difference between Noram and Cypress is the market cap. Cypress, they've got a 150 million valuation over Noram. So if you want to tack on a premium for water rights, which Cypress paid only 3 million for, mind you, and maybe a premium for being at the PFS level instead of the PEA, personally, I can't seem to justify that valuation differential. So, Peter, I guess I'm wondering, what's your take on this? Why is there such a steep valuation gap in your view?
Well, there is a lot of things. It's good to, tackle the water rights question. It's on a lot of people's minds. But my answer to that is this asset will have a net present value today. It actually has a net present value of 2.7 billion with a 52% internal rate of return. The sector needs 50 to 100 of these. So if some people out there saying, well, Noram's never going to production because they don't have water rights, I 100% disagree. It's key to have it, but when you've got a strategic major sitting right next door, and with the amount of capital that we have, I think things are going to change this year in the viewpoint of the water rights question. this asset will go to production. That's a very forward-looking statement, but the metrics are so insane that you can't utilize they don't have water rights, so they're not going to go to production. That is just so inaccurate. So I agree with you. I mean, the valuation discrepancy between, they have market cap of 250, we have a market cap of 60, so it's four times plus. There's a disconnect. The market's going to get it, and all we do is utilize the capital to the best advantage of our shareholders by de-risking the asset. We'll get the re-rate, and people will be looking back at 88 cents and wondering, that was a pretty good buy or purchase.
Right, and I think you already answered the question on the water rights here from one of our viewers. I mean, not to beat a dead horse here, but the plan for the water rights, it's not like you guys are just relying on a takeout here, right? You guys are you are searching, maybe you're in discussions for getting them.
Yeah, absolutely.
And okay, so we have a question here, a couple questions actually. So with such a large resource and the expected lithium deficit in coming years, are there any plans to increase production beyond the planned 3,200 tons LCE?
Yeah, for us, we're actually looking internally because, in an NPV, once you get past 20 years, it's all kind of fluff. And some of the numbers, you can only discount back so many years until they don't really make sense anymore. So we're looking at if we were to significantly increase production and looked at a 20 to 25 year mine life, scale, economies of scale really come into play. So yeah, that's absolutely, the faster you can get payback and increase the revenue, better for the shareholders, better for the NPV, for the internal rate of return, payback period. So yes, long answer short, absolutely.
Do you think that's something you guys will be maybe putting in your PFS?
I think we need to highlight to the market how the metrics change as you decrease the mine life and increase production. So yes, at a very high level, I think it'll be something that we would need to show either in the PFS or have numbers available in a presentation that highlight how the CapEx would change. I mean, our CapEx is only 530 million. I mean, so some projects are 700, 800, 900 million. So if we increase our CapEx to 800 million, how many tons can we throw per year? How's it change the payback period? And at the end of the day, the best, metrics in a PEA in our studies will help us drive the right year, and that'll be figured out in the PFS. And as we move to DFS and start doing the final engineering components to a final study, or the DFS, BFS, whatever you want to call it.
Right. Okay, and we have a question on the processing. So is the processing of lithium clay, is that a simple process at scale, or will there be a requirement to iron out issues once in production? And yeah, I guess with this question, maybe touch on how the processing circuit actually works. Are you guys using sulfuric or hydrochloric?
Yeah, no, for sure. So first of all, I'm not a metallurgist, so I'll attempt to. So really, it's one of the most easiest mining methods to start off. There's no drilling and blasting. You scoop it out of the ground like a bunch of dirt. You throw it through some roller crushers, not a ball or a rod mill crusher. You throw it in a large tank and disaggregate it 30% solids to water. So 30% solids, 70% water. And after it disaggregates very quickly, we have looked at and continue looking at the sulfuric acid stage, where you add the sulfuric acid starts liberating in it. I think there's another part of the process where I think it's called the crystallization part of it, where you're starting removing the magnesium and the calcium and the other materials that's in the clay. But it's, in theory, simple, but they're refining it. They haven't finalized the science of the removal, but they're getting up into the 85, close to 90% recovery. So again, if anybody wants to learn a little bit more about that, give me a call on the phone, ask me directly what they don't understand. I'll get the answer and I'll get back to them right away. And I'll actually learn through the process too. So.
All right, and with that, I think we've hit all the questions here. Why don't we leave it? why should we be paying attention? What are 3 reasons we should be paying attention to Noram right now?
First of all, we've got more capital, or will have when we close the financing by February 25th, next week or so, than the company's ever had in its treasury, which allows the company for the first time to aggressively push forward every facet of de-risking the asset from potentially acquiring water rights, from potentially increasing the resource, which we'll do, reaching the PFS, and also marketing the heck out of the company so that people understand what we have. And over the last week, I've talked to a number of funds introducing the story, and I've in those discussions, a couple of the funds were actually lead orders on our neighbor Cyprus, and they really didn't even know our story. So it shows there's lots of doors to knock on. That's what I love doing. I love to talk. I love to communicate a story. I like to be available. So again, anybody that's listening, if you got a question or if you don't buy a share, you do buy a share, just give me a call and get a comfort level, and you'll understand it. Just follow along. This is going to be our busiest year ever. That's a long story short. I'm excited.
As am I. So, Peter, thank you for joining us today. It's been a pleasure hosting you. And to our viewers, if you want to learn our thoughts on Noram Lithium, as well as some of the other companies that we watch or cover, we do publish all of our research on our website. It's totally free of charge. I put a long report out on Noram a couple weeks ago. I recommend you give it a read. A reminder that our next webinar will take place tomorrow at 2 p.m. Eastern, 11 a.m. Pacific, when Taylor Combaluzier sits down with Heritage Mining. Again, that's Wednesday, February 16th. We're a day later now, at 2 p.m. Eastern, 11 a.m. Pacific. So thanks for tuning in and have a great day. Thanks again, Peter.
Beautiful. Thanks, Gobi. Thanks, everybody. Give us a call. Take care.